At the tone, please record your message.
welcome back to Roxham TV and also welcome back to Gem Crypto. Whichever platform you're watching on, I hope you guys are having a fantastic day. As of yesterday, I kept seeing a lot of positive news, like first being after a huge outflow in the Bitcoin spot ETF, especially when it comes to BlackRock. Yesterday, we are seeing some positive. So finally, some money is flowing into the Bitcoin market through the spot ETF again. Yet, because the past few weeks, we are on a downtrend only. So that's not enough to justify and push Bitcoin to higher places. But that's okay. That's just only one good news that I saw yesterday. The second good news is actually Nvidia. So today in this live stream, I'm going to cover a lot of AI because we have some major breakthrough. Yesterday we have Nvidia's Q3 earning better than expectation, and we saw a tiny rally in Nvidia's price as well, even after market. So that's one good news from the AI sector. And other thing that I really want to touch upon is the LLM sector, because from Google, we have a major breakthrough, yet another major breakthrough from LLM, because seems like I just talking about this a few days ago, but yeah, it's quite difficult to catch up in this AI world and in this day and age, and especially at this rapid pace. Anyways, Google yesterday launched this Gemini 3 and it completely surprised the whole world by how good it is, especially when it comes to the video generating. Because I'm not sure if you guys would do this when I'm stuck with some mechanic stuff. So I don't know how to fix certain stuff. I will take a picture. So I will send a static picture to LLM, and LLM will teach me how to fix certain stuff because like I'm just not good with my own hand. So I have to ask LLM. But one thing that the current just before the Gemini 3 broke out. So one limitation when it comes to LM is that they can only read a static image. So they can read and trying to put everything, all the components together, and the AI will guess what it is looking at. But what's so mesmerizing about Gemini 3 is that you can even upload an image. In other words, the LM is actually reading every single frame, and that is like a major breakthrough. And we're gonna dive deeper into how amazed I am. I'm sure you could sense from my tone. But point being, there's so many good news, and especially when it comes to the AI sector. Yet Bitcoin looks like it's not doing much because we are heading for a bear market. We know we are heading for one because TA had actually warned us weeks ago when we reached 126 all-time high. So without further ado, let's actually dive into the TA first. And today we're going to start with the daily chart. So from a shorter time frame, and we're going to slowly build up that momentum to a higher time frame. So on the daily chart, let me actually zoom closer so you guys are not squinting. So from a daily standpoint, we saw that downtrend ever since 6th of October when we reached 126K all-time high. So I won't be surprised if in the coming days we get another dead cat bounce. So maybe we're gonna touch 100, even 102K. Like I won't be surprised, but I do think we're going to get rejected at these levels, and then we're slowly going to ground lower, and then we're going to head to the bear market floor, which I do expect is going to be somewhere around 57K. Like, bear with me, it sounds like a really, really dangerous zone. And if we also put up the death cross, you'll know why I would bring up these numbers. So the death cross, as I mentioned, we just need to focus on two lines here, the red line and also the blue line. The red line stands for the 200-day moving average, and the blue line is the 50-day moving average. When the longer time frame, so here is a 200-day, go above the 50-day, that's a death cross. And vice versa, if the 50-day goes above the 200-day. That's a golden cross. That's a gold cross. So here we have the death cross formed basically on 16th of November. And point being, there is like an equation because I love how TA works. Everything is just math, it's just data, and it's very compelling to how well it predicts the future and predicts the next move basically. So what's happening right here is that we have a recipe. So if we manage to stay above the 50-week moving average, yet having a death cross forming on the daily candles, that means it's going to be just a correction and end up being the best time to scoop up that BTC to purchase as many as you could. However, the second recipe for a bear market is that if we have a death cross plus Bitcoin trading below its 50-week moving average, that means this is a bear market. So I know we need to have 2 weekly candles close below the 50-week in order to have so-called the confirmation, but I'm calling it early. And this is not a popular statement because basically all the books have been checked, and I'm one of the early analysts out there to call this early. But of course, there will be backlash, and I experienced backlash as well. But anyways, point being, the death cross, it actually happened quite a few times, even within the cycle. Because like if we zoom out and if we look at the last time that happened, so the red line going above the blue line, last time it happened, it was back in April, so 6th of April this year. But point being, because back then we were still above the 50-week moving average, so end up here, it's just like marking the local bottom. It's so amazing to see like, okay, when the death cross happened. So let me circle that here. Whenever we see a death cross, usually the local bottom is near. And here we mark the bottom perfectly well. That was at 74K. So this is one time we mark a local bottom. And if we zoom out, we happen here again. So that was 9th of August, 2024 last year. So red line going above the blue line. And here we have another local bottom. Like it usually, it means like the local bottom is near or it has been behind us. And in this case, it's just like the death cross happened. Okay, here, 1, 2, 3. So it happened on 9th of August, but the local bottom happened on 5th of August. So it was a foretell to say that, okay, the bottom is either near or we have already seen the bottom. So here is another second instances that we use this scenario, and basically we could predict where the local bottom were. And during the cycle, there was like a third time we experienced this as well. So here back in 2023 September, we had another death cross, but point being, because we were above the 50-week moving average, so we call the local bottom rather well as well. Yet again, so we call the bottom at $25,000. So it was end up being the best time to scoop up that BTC, because look at this, like we call the bottom, and then that was like a huge rally. So 96% rally before we kind of like top up here, and then we trade sideways, have a little correction, a 22% correction. So yeah, I mean, that's the beauty of TA. This time it's different because the death cross happened at the same time when we dip below the 50-week moving average. So even if we get a bounce, like what I'm gonna do, because like I have been selling, I've been taking profit because like I've been around for cycles. So I have been taking profit when we were forming this downtrend. But since I almost confirmed this is a bear market, I'm 80% confirmed this is a bear market. If I see a dead cat bounce again, maybe it doesn't have to be like specifically touching the downtrend line, maybe we get to 100K, then what I'm gonna do is that I still have a little bit crypto, especially altcoins. I'm gonna sell even more altcoins when I see a dead cat bounce, and yeah, when we trying to get close to this region again. I'm not ruling out the rest 20% because, as I claim, I'm 80% confirmed that this is a bear market already. The rest, the 20%, I'm not ruling that out. Like, for me to be bullish again and basically on par with those on-chain analysts, is that I need to see on the daily candles Bitcoin actually close above that. And it seems to be like there's such a separation between TA and on-chain, and even with the macro tailwind as well, because like, okay, I know there's going to be some rate cuts to come, global liquidity unlocking, yada yada yada, but shutdown is also creating a lot of uncertainty. So even for macro, it separates into two groups of people. Like, the first group is bearish, like me, because I do think 2026 is going to be a bear market according to the Bitcoin traditional 4-year halving cycle. So when I see a dead cat bounce, I would like to take a little bit more profit off the table, especially when it comes to altcoins. All right, so here is a daily chart, and let's also hop onto the weekly chart because I touch upon the global liquidity a little bit. And here I want you guys to focus on the yellow line. So the yellow line here is the global liquidity. And it's so mesmerizing because like Bitcoin's price have been almost trading so closely and so correlated with the global liquidity. So this is actually some bullish tailwind because people tend to think if there's global liquidity unlock, then Bitcoin going to rise. And usually the correlation is global liquidity would move fast and then Bitcoin kind of lag 2 to 3 months behind. So I want you guys to focus on this yellow line, which stands for the global liquidity. And if we like zoom closer, what usually happen is that, okay, for example, here we have a bottom and then global liquidity goes up, but Bitcoin kind of like has a period of some lagging period for Bitcoin to catch up. So here we have the bottom of local liquidity, but Bitcoin only found the bottom like 3 months later. So if we take the bottom to the bottom of Bitcoin is around like 90 something days, something like that. So there's a lag, which makes Bitcoin more predictable, I would say. So point being, we know that global liquidity is slowly going to kick in. We know the Fed going to be done dumping its bonds if we actually pull out the Federal Reserve, the balance sheet. So let me actually close the global liquidity. So here I want you guys to focus on the blue line instead, because this blue line stands for the Federal Reserve, the balance sheet. We know QT is going to come to an end, and it's going to end as soon as 1st of December. So ending QT doesn't mean that the Fed going to go out and purchase all the treasury bonds available in the market, because if they do that, that means a QE. So QE means the balance sheet would actually go up, but that's not what they're planning to do. What they're planning to do is that instead of QT, so QT means the balance sheet would continue to go down, they are ending QT. So that means the balance sheet is going to go sideways. So going to consolidate and stay here, chop around for quite some time. That's what QT means. The reason why they think, okay, this is the right time to end QT is because essentially we are done with that tariff stimulus money. So if we zoom out, so we are right now sitting at $6.5 trillion on the federal balance sheet. And if we zoom out, last time we go back to this level, it was back in April. So that was before all the COVID stimulus money. So yeah, the Federal Reserve simply feel like, okay, we have done enough damage from the all the rate hikes. So it's finally time to end the QT because we have removed all the money already. Like, in my opinion, I actually think Jerome Powell has done a decent job because during his term, we have seen like almost a double-digit inflation, like 9.1% CPI report, yet he managed to bring down the inflation. We, of course, it's still about 2%, but we are close enough, I would say, from a 9.1% CPI. He managed to do that in just a few years, so control inflation, yet stock market went to an all-time high, gold went to an all-time high, and Bitcoin, we touched all-time high as well. It's just like right now, we are going through a bear market. That's it. So I do want to give some credit to Jerome Powell because like I feel bad if I were in his position because like we know the inflation this time from the US government, it was created by fiscal dominance. So, in other words, it's the US government printing all these excessive money. That's why we had all this inflation and this crazy number. We reached like 9.1% CPI. But if we actually zoom out to all the inflation when we got out of control during the US history, it was due to, okay, baby boomers was out there purchasing assets, purchasing houses, and that's why inflation went up. So point being, in the previous cycles, it was so different when inflation were out of control. It was created by retails. They're trying to purchase asset. But this cycle, it was created by the government, and yet Jerome Powell still managed to control the inflation and not completely crashing the market. So I would I would like to give some credit to Jerome Powell, actually. But right now, I do see both sides. We have bullish cases and we also have bearish cases. So bullish cases being that, first of all, the Fed balance sheet is gonna stop dumping. So we're gonna stop seeing this line going down. Instead, we're gonna see this line going sideways. So this is one macro tailwind. Another one is, of course, the global liquidity that I was showing. Global liquidity, we know it's not just the US printing money, but like all these governments around the world will be printing money. So I like using the GLI, so Global Liquidity Index, on TradingView quite a lot because it's actually combined all these important countries. So like we know China, Japan, so all the major central banks around the world, and TGA account, we touch upon this, especially during the shutdown quite a lot. So it combined all the data into one metric. So that's why it's so reliable, and that's why Bitcoin is like trading very closely with the global liquidity. It could be a potential tailwind, a potential good sign for Bitcoin's price as well. But it depends on which side you believe. If you believe that, because 2026, it also happened to be a midterm election. And whenever during a midterm election, because there's so much uncertainty in the market, like the markets just don't know which side to be lean towards to, whether it's the Republican or the Democrats. Because right now, Donald Trump is creating so much rage. Like American citizens in general, they're not being so supportive of Donald Trump anymore because the shutdown, most of the average American people, they're putting the blame on Republicans instead of Democrats. So during the midterm, maybe Democrats going to win, and there's uncertainty in the market. And usually markets never like uncertainty. And during a year like that, I'm sure Bitcoin would have reason to go down. And it also happened to align with the Bitcoin 4-year halving cycle. So that is another case we have to consider. But anyways, like this is just the macro tailwind. And if we also pull up the RSI, because like on the weekly for the RSI, we know we have this magical number, which is 40, 44 or 45, somewhere around that. Actually, let me close the global liquidity index, because like every single time I have to zoom out like this. All right, so if we pull up the RSI, we know historically speaking, if we drop below 45, this magical number, we're gonna enter a prolonged bear market, because like last time when we dropped below, it was back in December 2021, and we know when we drop. So here, let's go to the price point. When we drop, we actually, there's another 68% of correction. Like, I don't think this cycle is going to be as severe, because we didn't went so crazy. We didn't technically have that euphoria stage. So maybe instead of 68%, we're going to have like we're going to drop to 57K, something like that. The reason why I'll bring up 57K is because like we know for Bitcoin and bear market, we just tend to go back to the 200-week moving average. And 200-week right now is that we are sitting at 55,000. But point being, this 200-week right now, we're going to slightly rise a little bit, because that's what happened in a moving average. It's going to smooth out the price action. So when this slightly catch up and when Bitcoin slightly dip, maybe it's going to be around 57K. The reason why I have this number is, okay, let's actually hop onto the 2-week chart, because I was talking about well, let me close the moving average, because I was talking about a rising wedge pattern. As we know, like if you guys watch the show, then you'll have like the education of the TA reading all these patterns. So as we know, we have a rising wedge, and usually when we have this like rising wedge is a bearish pattern. And how we could tell is that we have 2 touching point on basically above, 2 touching point and 3 touching point at the bottom. That's how you form the rising wedge. So this also align with the weekly, because like if we apply these magical number, so if we just use the pattern, we're gonna essentially, well, let's actually do this a little bit better. So if we just like take the width of the rising wedge, we will have roughly 50 something, so 55K. And this also happened to align with the bottom we have been forming. So this is like the mid level. Let me draw the rectangle here. It's also happened to the mid level that we've been siding. We reached the previous all-time high of here, but like if we draw the rectangle, the mid-level is around 55 to 57K. So this is my prediction, and I do think we're gonna have a more pain for 365 days, because that's usually when we see a cycle bottom. And I do think, like, I agree with you, Bam Bam Crypto is like really quiet chat, because actually not much is going on in terms of Bitcoin's price. And I do think it's gonna be quite boring for quite some time, and more correction. So if you count correction as not boring, as exciting, then there you go. There's more chart to look at. But if you Okay, so if you want to see how low we could go in the coming weeks, so near term, because at the end of the day, we're looking at the 2-week chart. So All right, so we have this like, let's actually go back to the did I cancel that already? But I'm eyeing closely this region. Like we kind of lost 98 to uh 98 to I mean 89k, what I'm saying, 89k to 92k, so this region. But the next one I'm eyeing closely is 73k to 70k. That is another support region. And during, like in between this region, what I'm saying is that if we lose 98k, there's like a free fall. Like there isn't much data point in this region. So I call this like a free trading region. And the next support region that we could see on the chart is 71 to 73k. So that's one thing we have to consider. And if you guys want to pull some position, I don't know, like I know some DJ would like to short the market, but my advice is that during a downturn like this, try to stay away. Try to stay away with leverage because like it's not fun. We're seeing billions of dollars being liquidated in a single day. Like I thought we have wiped out all the degen on 1010, so 10th of October, but turns out like even ever since we are seeing billions of dollars being wiped off on a daily basis, on a 24-hour basis. So try to stay away from the degen stuff for the time being. And one thing I noticed is that there's a record number hit yesterday, so $523 million from BlackRock's flagship Bitcoin ETF. And of course, the ETF that I'm referring is the iShare. And if we scroll down, there's like a huge red zone for iBid. Right now, they're still holding 782,000 BTC, so that's a lot of BTC. But this means what they're essentially saying is that we have the largest outflow ever, $323 million leaving in a single day, and that broke the previous record of $463 million just days earlier. And if we actually look at the flow, so here, let me zoom closer. So if we actually look at the outflow or net flow of BTC spot BTC, we keep getting this consecutive days. So 1, 2, 3, 4, 5 consecutive days until 19th yesterday we have a small inflow of $14 million. I mean, it's better than nothing. At least it looks like the bleeding has stopped for a little while. That's good news. So this happened while all US Bitcoin ETFs combined saw a $372 million of outflows on 18th of October. And if we look at Ethereum, it got hit even harder. So it's not a fun time for holding Ethereum, I would say. So Ethereum net outflow, if we scroll down, it's all ETH flowing out of the ETF from a USD value. So how many days? So 1, 2, 3, 4, 5, 6, 7 days of outflow. It's worse than Bitcoin. It's more painful than Bitcoin. So I'm still holding my Ethereum, but as I mentioned, if I see a dead cat bounce, I'm taking my profit again because like I've seen cycles and I don't want to be hodling, especially when it comes to altcoins. And yes, I do think Ethereum as an altcoin. And let's come back to the Bitcoin one. So despite the withdrawals, IBIT, so the BlackRock's trading volume still is the biggest, is around like $4 billion every single day. That means investors weren't panicking, like they were actively repositioning. So that's the word, reposition, rebalancing during the crash. So I think like there is some confusion out there, like seeing BlackRock selling BTC, because I have seen topics or headlines like that. But I do want to stress this. It's not BlackRock personally selling BTC because it wants to or because they are bearish. It's happening because their clients want to sell BTC and want to redeem the ETF shares. The ETF must sell real Bitcoin to give them cash, and BlackRock is just executing the redemptions. BlackRock is, like, if we scroll down, still holding a huge chunk of BTC, and ETF inflows and outflows happen automatically based on investor demand. When people buy shares, BlackRock buys BTC. When people sell shares, BlackRock sells BTC, and that's how it works. So the outflow is just a customer reaction, not a Bitcoin strategy. It's not Bitcoin itself being bearish on Bitcoin. So question is, why the investors are selling? So the investors of IBIT, why are they selling? So when it comes to ETF, most of them are institutions. So the customers we're talking here, they're hedge funds, they're pension funds, they are sovereign wealth funds and family offices, so smart money and like whales basically. And these players react quickly to macro, especially macro. And we know we talk about the shutdown and Bitcoin is crashing. So Bitcoin crashed like 30% from its all-time high of 126K. And if you are the group of people who believe in the 4-year cycle, and looks like the 4-year halving cycle is playing out beautifully. So maybe you could argue it's a self-fulfilling prophecy, but anyways, it works and I trust the data. And maybe some of them, they have this in mind. That's why they're selling. And when it comes to the macro, we know the Fed, the decision in December, likely gonna stay constant. So they're not gonna get a rate cut because poly market is usually spot on with this kind of stuff. We know that in October, that was a 90% guarantee. So 90% of people think that we're going to get a 25 basis point cut. But because of the hawkishness and some of the federal agency actually came out and say inflation is still somewhat sticky and shutdown is just creating that uncertainty. They can't see the sky clearly to have a rate cut and immediately we have this done. And right now, 69% of people think that the rate gonna be unchanged in December. So this is one of the reasons why macro is not doing so well, and the FOMC minutes they sound really hawkish, and other macro signal basically all these so-called smart money to reposition to rebalance is that the talk of AI bubble is at a crazy high right now, and people think that even Nvidia might be near the top. So when macro fear rises, big institutions reduce risk, and Bitcoin ETFs are often the first to get trimmed because people still view Bitcoin as a risk-on asset. And for smart money, like before the crash, Bitcoin was still up 30% year to date. So many funds simply want to lock in that profits and reset leverage or move some of that cash into other asset, maybe like gold, because like gold is doing really well. If you compare year to date, it's actually better than Bitcoin. So despite this market crash, gold is still doing really well. So it's up 22% in the past 6 months and it's still about $4,000. So maybe some of that smart money rotating to gold. So yes, like this selling does look like smart money behavior during early bear phases. And some of them is really salty and seeing gold is doing better than Bitcoin. But guys, zoom out, like Bitcoin is still going to win on a long-term basis. But one thing, it's not like all doom and gloom because we know BlackRock got hit hard because they are the largest one and the flagship Bitcoin ETF. But one thing, like one good news, is that since IBIT is taking the most heat from the Bitcoin outflow, I do expect it's going to bounce back the first one to bounce when the market is done correcting, because simply BlackRock is the largest and the most liquid Bitcoin ETF out there. It often leads sentiment. It absorbs both panic selling and aggressive dip buying. So big flows always happen to BlackRock first. But if macro fears stay high, inflows may remain weak for a little bit longer. So I want you guys, so the key takeaway for this show is I want you guys to think about your position right now, because I'm not asking you to follow what I'm doing, and because it's not financial advice, but like do ask yourself for your own risk tolerance. The bulls tend to believe, like only believe the macro tailwind or on-chain analysis, because on-chain is so different to TA, but the bear tends to only believe the full-year halving cycle or TA. So ask yourself first your risk tolerance, how you would manage this based on what you know, the key takeaway from this live stream. And short-term traders may sell, long-term believers usually accumulate heavy during fear. Because like I'm not afraid of bear market. Bull market is fun for trade. It's fun for trading. Like I could flip quick money, and I'm always like addicted to the screen, very curious to see how high Bitcoin or all these altcoins would go. Well, altcoins would go in a quote, direct quote. But like bear market is when you make generation of wealth. So during a market crash like this, ask yourself your financial needs. Like, do you need that money? Like, I'm sure a bunch of you guys invested a decent amount in crypto, in Bitcoin. So ask yourself, do you need that money? Like, do you need it to pay your rent, to support your kids, to buy food? Then in that case, like, it's a good idea to take some profit or sell the crypto. But if you think it's okay because you have a high risk tolerance and you're actually in a better financial position than most average people out there, then you know what to do. Of course, it's not financial advice, and I'm not a life coach as well. So change your strategy, change your portfolio according to your own needs, not because of some analysts or some influencers on YouTube say so. All right, so back to this one. BlackRock, in other words, he's not dumping. Well, they are not dumping Bitcoin. Their customers are. And the wave of outflows was driven by institutions reacting to macro fear and a sharp crypto sell-off. So anyways, that is the TA and also all the numbers. The section went a little bit longer before we take a little break, but like after that, we are also going to look at some jobs data, because in the coming hours, it's going to be volatile. We have the delayed September 2025 job report coming out in a few hours. So stay tuned to that. We're also going to look into AI, and we are really going to dive into AI. So let's take a little break, and I'll see you guys in 3 minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
in a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Alright guys, welcome back to Roxum TV and thanks for sticking around. As I promised you guys, we're going to take a look at the jobs data because in the next few hours ahead of us, it's going to be volatile. We finally have the delayed September 2025 jobs report coming out at 8:30 a.m. Eastern Time. The report is actually over 6 weeks late, because the government was shut down for the longest in the entire US history from, I think, 1st of October till 12th of November. During the shutdown, agency actually couldn't collect or process economic data, which forced the BLS to postpone its monthly release. What's even more unusual is that October 2025 jobs report is completely cancelled right now because the shutdown stopped key surveys, including the one used to calculate the unemployment rate. The BLS couldn't collect enough data to produce a reliable report. Instead, October's payroll changes will be rolled into the November report, which will now be delayed to 16th of December after the Federal Reserve's final policy meeting on 9th of December. This is actually the first skip job report since 1940, creating a major blind spot for policymakers, markets, and the Fed, because with no October data, the Fed is essentially driving in the fog, heading into a crucial interest rate decision, because like they just have to guess where the economy is going while they're driving really fast. They're driving in the car and with all this fog. So as for the number that we're speaking here, like we do have some expectations. So the report is forecast to show a gain of 50,000 jobs in the public and private sectors, up from the initially reported 22,000 in August, but indicative of a soft labor market. So if we scroll down, here is the monthly job created in the US. One thing I want to mention is that, okay, here, that was back in June, we have a negative number. So we lost 13,000 jobs according to some job revision data. And in August, we only added 22,000 jobs. So how do you read this? Usually the number we're looking here is at least 100,000 jobs being added in that month. So in other words, we have been below the target ever since May. So May, we have a massive revision. So we revised down to 19,000. And then in June as well. So it's actually a negative number. So that was like that 2 months. I remember Donald Trump was extremely mad and wanted to fire someone at the BLS yet again, because Donald Trump being Donald Trump. So I would say, like, I kind of take this with a pinch of salt, because even if we do a really nice number, like maybe 100,000 jobs being added, but like 3 months down the line, we could always revise to a negative number. And so I'm taking it with a pinch of salt. But how weak is the U.S. labor market right now? The U.S. market is cooling, but it's not collapsing. If we also hop onto the unemployment rate, it has been ticking up, and right now is sitting at 4.3%. Of course, we have a blackout since August. So if we zoom out to the 3-year unemployment rate timeline, we know this is an uptick. It's huge uptick from let's take like August of 2022. So it's like exactly the 3-year timeline. So it went from 3.6% to 4.3%. That is a huge jump, and that's why the Fed is in a difficult position, like whether they focus on bringing that inflation down to that magical 2%, or they just like gonna cut rates and try to save the unemployment on the labor market. So 3 years wise is an uptick only, but like it's actually, if we zoom out to maybe 5 years, it's actually not that bad. Like we have seen worse. It's just like, of course, it's an uptick, but like point being, the economy is weakening, but it's not like it's not at a crisis, I'll say. So the shutdown definitely added a lot of pressure to the labor market, because over 800,000 federal workers were affected, and these workers are counted as unemployed during shutdowns. Hiring also slowed because business lacked visibility. Economic data across agencies were delayed, but there's still private sector data to look at. Like as for the private sector, we could look at the ADPs, and it showed that October adding only 42,000 jobs, proving the economy wasn't in free fall, but it's definitely struggling. And on top of that, we know AI, because of AI, there's some layoffs going around, because we covered that on Roxham TV as well. So for example, Intel cut around 15% of their staff. And not only Intel, but like large, big companies, they have been laying off a lot of people. Like in 2025 alone, from tech companies, they have laid off over 100,000 workforce. Companies sometimes use AI washing to justify cuts, and the companies that joined the list, including Amazon, Microsoft, UPS, they shredded quite a lot of workers. But what's not true is that some people would take it the wrong way, like the AI is killing the whole US job market, is killing the whole US job growth. while studies show that AI adopters often increase hiring as AI-related fields are expanding. So the core drivers of labor weakness that we are seeing here are actually a combination of reasons from a macro weakness. It's not just because of AI, but we do need to learn how to work with AI. And in terms of the labor market, like the labor report coming out in a few hours, of course, there's going to be volatility yet again. Like October's number are gone, but we do expect a weaker November. Like November job gains are likely under 100,000, and unemployment rate we could actually take even higher, maybe 4.5%, and it could get worse in December, maybe even reaching 5%. So that's going to be a little bit more concerning if we do reach that number. But as of the rate cut, like as I pull up on Polymarket, we down from 90% of chances of having a 25 basis point of right now only 30%. So it's not likely we're going to get, because there's no reason if during a shutdown there isn't any data. So pay attention to what to come in the next few hours. The US labor market is slowing but not collapsing, and the data blackout from the shutdown is making everything harder to read. Today's September report will set the tone, but without October's number, the Fed may pivot a December rate cut simply because it can't see enough evidence to move. All right, so that's the macro in the coming hours. Let's actually move to AI, because that's quite a lot of AI news I want to cover. First one is, of course, Nvidia, because we have this Q3 report, this revenue report coming out last night during Hong Kong time, and the report blew past expectations and showed Nvidia is still dominating in the AI chip world very, very much. And let's actually look at some numbers. So let's go to CNBC. So what happened yesterday is that Nvidia said it expects about $65 billion in sales in the current quarter versus 1.43 in earnings per share on $61 billion of revenue expected by analysts. So yesterday it was really good. So here's how the company did compare with estimates from analysts pulled by LSEG. So earnings per share, they expected $1.25, while they got like $1.30. And revenue, the estimation is $54 billion, but in reality, they got $57 billion. So it's so much better than expected. The company said net income in the quarter rose 65% to $31 billion, or $1.30 per share from $19 billion, or 75 cents per share in the year ago period. So really amazing. And we know a lot of sectors, including like gaming or automotive or visualization, they all grew. But almost everything now depends on AI data center chips. So that's why it's working so well on Jensen Huang behalf. And the CEO, Jensen Huang, he did say AI is hitting a tipping point across every major industry, and dismiss the idea of an AI bubble, because we cover on Roxham TV exclusively. We know Michael Burry is shorting Nvidia and calling the whole AI sector being in a bubble. And because of the earning yesterday being so good and better than expectation, Nvidia stock price, it rose like 4 to 5% in after hours trading. So we're looking at the 1 day time frame, we rose from $185 to like $196. So that's a really nice pump. But again, like the pump is kind of smaller than some expected, because like the reaction is being more mild. The reason why is that, okay, Nvidia already carries extremely high expectations and macro fear is rising. Many investors expected a beat. The real question is whether this could be sustainable. Like, can Nvidia keep beating its earning? So why this quarter matters so much and why we're paying such a close attention looking at this Nvidia earning? Are we in a bubble? So there are definitely some signs of being frothy. Like Nvidia right now, if we go back to the chart, like if we look at the market cap, is sitting at $4.5 trillion and it's the world's largest company. So AI stocks powered most of 2025's market gain as well. We know the entire US economy is now rely on AI. They're going all in AI alone because there's no production in the US whatsoever. So they need to make the tech work. They need to make AI work. And the biggest AI company out there is none other than Nvidia. In other words, Nvidia is basically carrying a lot of weight. Nvidia kind of represents the US economy right now. And we know Michael Burry is making a lot of criticism, like AI, ROI isn't proven yet. What Michael Burry did just like 2 weeks ago is that, okay, first of all, he closed down his fund and then he took a massive put position against Nvidia in Q3. And he also shorted Palantir heavily. So he shorted on Nvidia and Palantir, essentially the biggest AI companies in the US, and he shorted that heavily. So people are saying that is very concerning because Michael Burry was right, and of course he was the lead character in The Big Short. Like the lead character was like referencing Michael Burry in the movie of Big Short. And Michael Burry did warn about suspicious revenue recognition. So looks like all these AI companies are coming together and push the revenue up, push the price up. And he also bring up a really good point because there is a lot of idle GPUs laying around from tech giants. Like even Microsoft, what the problem with Microsoft is that they have many NVIDIA GPUs, but because there isn't enough electricity in the US to run those GPUs, and end up those top tier GPUs just lying around and turn dusty. This could be a really concerning problem for AI sector moving forward in the US. And this would definitely affect US economy, or maybe 2026 being a bear market, or even not just bear market limited to Bitcoin, but also in the traditional market. Because Nvidia controls like more than 90% of AI chip market. And big tech is spending $405 billion on AI infrastructure this year. AI is now more than 1/3 of US stock market value. Because of this, Nvidia is exactly the proxy for US economic growth, for US GDP. If Nvidia stumbles, it could trigger tech layoffs. It could trigger a hit to the GDP of US, slower cloud capex, which is capital expenditure, or lower stock market growth. So Nvidia is not just a company anymore. It's an economic pillar. One country actually controls the entire US economy. And because it's so big, it's becoming the monopoly of AI. There's some risk going forward for being a monopoly, basically. Like, even with insane growth, Nvidia could face real risk. For example, over reliance on just like one company. So a slowdown in AI spending could quickly drag down the entire tech sector. And the second one Nvidia is facing is actually competition. So competition is really keen big tech is also exploring for their own chips. For example, Tesla, they're exploring their own chip for Dojo. So as Google, they have TPUs right now, and Amazon and Microsoft. So these custom chips could take up maybe 45% of the AI accelerator market by 2028. This doesn't destroy Nvidia, but it chips away from its market share or margins or pricing power, because Nvidia can charge really high, being the monopoly in the market. And there are some rising calls to break up big AI, especially because Nvidia controls the chip market and it controls the CUDA software ecosystem. And I'm not sure if you guys know, like the power of Nvidia is not actually the hardware, but the whole software CUDA ecosystem. It's like it's so locked in. Once people start using the hardware, they have to use the CUDA, and it's just like when you use iOS device and you use the iOS software, like you locked in, and it's very difficult for you to hop onto another software. So this is the benefit of NVIDIA and the advantage of NVIDIA. So is NVIDIA near the top now that is the most expensive companies in the world? So there's a lot of bull case and bear case. For example, for the bull case, Blackwell and Rubin, the demand is enormous, and AI adoption is really accelerating from all around the world. And for, as I mentioned, the CUDA ecosystem and the supply chain and partnerships of NVIDIA, the whole ecosystem actually locks in a lot of customers. So even at a 50% year-to-year growth, NVIDIA still beats every other mega cap. But as for the bear case, so siding with Michael Burry, like AI spending by big tech is slowing down. We know the competition is really keen. And the macro, as I mentioned, it does look a little bit shaky because we are just getting out of the shutdown. And the Fed is no longer cutting interest rate in December. So that's not nice. Nvidia, so in other words, may be experiencing a cyclical peak with a potential 20% pullback if sentiment flips. But long-term fundamental demand for AI compute actually remain really strong. So going back to the earning, Nvidia deliver a monster quarter, one of the best in history. But the market backdrop is more fragile this time because the AI bubble fear is growing drastically. So Nvidia is still the powerhouse of the whole entire AI era, but the stakes are getting higher and higher. All right, so that's for the Q3 earning. Let's also move on to one thing I found really interesting yesterday is Gemini 3. I'm not sure if any of you guys tried that out, but like they launched this yesterday and it's mind-boggling. Because, okay, Google officially launched Gemini 3 and the global reaction was explosive. It's being called Google's most intelligent model, yet intelligent model, a major leap in AI autonomy and a direct challenge to OpenAI's ChatGPT 5.1 or Grok 4.1 or Claude 4.5. So there's so many LMs out there. Like it feels like every single week there's some AI major breakthrough, because I've talked about that many times actually, but this one I was really impressed, and it's only going to get better for sure. So Google actually pushed that Gemini 3 everywhere on day one. So that means you're going to get Gemini 3 from Google search. So there's like this new AI mode. You're going to get Gemini 3 from email as well, from Google Doc, from Google Sheet. And also there's this new agent platform called Google Anti-Gravity. This level of integration normally takes months, but Google did it the same day. And social media went so over the head, actually exploded, and people call the model the moment Google takes the LM Chrome back, because like Google Gemini, it hasn't been performing so well. Like actually, I would prefer Grok, but like after seeing Gemini 3, I'm impressed. Early users were shocked at the autonomy. Like Japanese outlets even claim it surpassed ChatGPT 5.1, and some tiers are free as well. So you guys are welcome to try that out. So this Gemini 3 isn't just another LM. It's a major step toward agentic AI. That means AI can plan, can reason, and actually take actions. So you know when you're using LM, you essentially just like asking questions and they answer you. And when it comes to execution, you still have to do everything yourself. But this is getting very close to that actual agentic AI where it can operate and actually push that button and do everything and take actions for you on your behalf. So what this can do is that it can process text or images or videos, because Google is getting really good at processing videos and outputting videos, and of course audio, GDFs, PDFs, so sorry, PDFs, and it does so with native fusion, meaning it understands everything together, not as a separate input glue on top. It performs 50% better than competitors on long-term multimodal tasks. GPT 5.1 is still excellent at pure reasoning, but Gemini's multimodal fusion and the tool execution give it a broader edge. So I'm sure you guys are very curious like how it works, or some looking forward for some real examples. So here are some examples that put together in one tweet. So it's really good at, like, if you upload a static image and it's gonna create a detailed guide, a detailed video, or even turn it into a game. Like, look at this, like everything, it could be 3D if you want to. So here is some random game. And if we scroll down, it's more random game. So you could type your simple prompt and it generated a whole game for you. Here, I'm so impressed. So this person asked Gemini 3 Pro to create a 3D Lego editor, and in one shot, it nailed the UI, like some very complex functionality. And yeah, this is a new era. And look at the details. It's very impressive. And more games, because like here they just upload a image of board game, and it turned into a chess board game in a matter of like minutes. That's so impressive, right? And you could even upload some like scribble. So maybe, you know, at the on the napkin you want to write something, some scribble to explain certain stuff. If you take a picture of that scribble and you upload that to Gemini 3 Pro, you're gonna get like all the detailed explanations. So you could turn your scribble, your drawings, into a educational video, into even some game, or create a PowerPoint. Everything. It's like everything is agentic. And here's another example I found really impressive, because this person is speaking on a video recording, and essentially the AI will kind of hold this person's hand and guide what to speak next. Because like, I'm not sure if you guys have experienced that. If you're speaking to a static camera like I am right now, sometimes your mind will go blind, like you don't know what to talk next. Like you don't know where you're going, but like having these notes and AI guiding you, or maybe some reference you could look at and some talking points you could talk next if you all of a sudden you go dead air. That's a really good tool. Like I would use this and I found that really helpful as well. And here's another really insane graphic. So they uploaded an image of a tree like this, and they turn it into a 3D game. Yeah, it's really impressive. So I highly recommend you guys checking this out. A lot of game in this tweet. So here's more example. So more game. So just from a few prompt, they managed to turn into a football game. And look at the attention of the details. Is really insane. And not only games, because I've been showing you a lot of games, but like actually you can use it and build a website. Here is a professional looking website, and it's over for designers or like devs, because like it's it's looking better than some products from an actual human. So it's actually insane. And if we look at the benchmark as well, so actually here, if we look at the benchmark as well, Gemini 3 is getting so smart and it dominates nearly every major evaluation. If we look at the reasoning, like Gemini 3 Deep Think is sitting at number 1. If we look at scientific knowledge, again, it's the best out of the all LMs available in the market here. And when it's come to the visual reasoning puzzles, again, Gemini 3 Deep Think is sitting at number 1. So it leads in the major key categories, especially when it comes to the visual, when it comes to agentic reasoning or multimodal coding. So deep think mode pushes the score even higher. However, of course, it comes with a cost because like Gemini 3, especially Gemini 3 Pro, is actually not cheap and is more expensive, a lot more expensive compared to ChatGPT. So Gemini 3 Pro, the pricing is like $1.25 to $2 per million input tokens. And when it comes to the output tokens, is around like $10 per million output tokens. So of course, it's going to be more expensive than ChatGPT, but I would say it earns the premium through video processing, through the agentic performance or the TPU optimization. So the TPU optimized compute. Of course, there's free tier available as well. So I do encourage you guys to check it out just for fun, maybe create some games like if you want to. But why is Gemini 3 such a big jump? Because like Google as a company, it has a vertical integration, and that's why Google managed to do it better than most of the tech companies. Like I'm sure I have more conviction to for Google than I have for ChatGPT, for OpenAI actually. The reason why is because Google controls everything end to end. They have a vertical integration. First of all, Google handles all the data in the world because they have been a giant for more than a decade. Like when you search, like search engine out there, Google is so far still the strongest. And Google controls like data from YouTube, from Gmail, from Android, and trillions of training tokens. No one else has this level of data diversity. And when it comes to hardware, Google actually trained their own hardware. So they have their own TPUs, not Nvidia GPUs, because like we were talking about Nvidia just a moment before. So Nvidia has its own GPUs, but like Google actually want to do that in-house, and it's called TPUs. And it gives like 20% lower cost and better energy efficient and faster scaling and more customizable for the Google needs. So Google can do what competitors cannot. They train gigantic models without paying the Nvidia's tax. And when it comes to software and distribution, we know the software is doing brilliantly from all these search, from like cloud customers as well, and developer tools and YouTube integration. This is why regulators are calling to break up big AI, and it's getting a huge giants basically. But the final takeaway for Gemini 3, I would say, like it's not just another upgrade, because like we have heard of a new LM, like a new upgrade, a new model coming out from, I don't know, China or US, but like this is just like, it's pushing us one step closer to AGI. Possibly we could really reach AGI by 2027, just like the prediction from Leopold, as I mentioned in the previous show on Roxham TV. So Google, from this Gemini 3, they reclaimed the AI throne again because they were lagging behind by a bit. And agentic AI is here. It's finally here and it's really powerful. I cannot wait for AI to handle my daily chores or just like push button and order, I don't know, some toilet paper for my house. But like we know, another LM that I have high hope for is actually Grok, because I talk about Grok quite a lot and I use Grok on a daily basis. So the reason why I think Grok is like when we see Gemini 3, yes, it pushed the benchmark to a lot higher. Yes, it makes the competitors like there's a lot of room for competitors to catch up. But we know I have conviction in Elon Musk, and straight after he has seen the Gemini 3, he pushed out this tweet. So Grok 4.1 fast with reasoning just beat Gemini 3. So yeah, you know, Elon Musk is very committed to make his LM stronger, and you know the style of Elon Musk and how Tesla. And another reason I have strong conviction for Grok is that I have seen the rapid improvement from Grok. Because like Grok actually improved a lot in under just 2 years, and XAI is just a startup to begin with. And when Grok 1 launched, so Grok 1 and Grok 2, the early days, Grok 1 actually launched in November 2023, and it was so shit. Like, it was like, you can't use Grok 1 at all. Grok 2 is not that good neither. Like, it became like multi-module. It could handle text or images and audio. It's, of course, better than Grok 1 because, like, it started to beat some rivals on creative tasks. But whereas Grok 3, it became so good, it was like a, oh God moment. Like, wow, I can actually use Grok for something. So, Grok 3 actually outperformed ChatGPT 4, Claude 3.5, and DeepSeek V3. They introduced Grok 3 Mini as well, which was stronger than some of the rivals and is up like 3x cheaper. And this was the key. Grok didn't just get smart, it got efficient. That matters a lot for real-world deployment. Whereas Grok 4 and Grok 4.1, which is the a new update that we got, Grok 4.1, it was a huge jump as well in terms of human preference tests, in terms of to use, in terms of hallucination, because we know a key issue that lies with LLMs is that they like to make up stuff and the stuff that is not true. So Grok 4.1 actually lower that issue quite a lot. And I'm really amazed by how XAI, like how fast they move, because XAI definitely behave like a true startup, not some giant corporate cloud division. Because we know for a proper corporation, they work really slow, while XAI is just a startup. So they would push the versions, the upgrades out very often and very unexpectedly. And each drop tends to flip benchmarks overnight, because we have seen that happens a few times already. So XAI, I'll say, it has the Elon Musk level resources. So they can pull data from X, which, because like if you're watching this channel and if you're watching this show, I'm sure you guys will go on X quite a lot and tweet quite a lot and read quite a lot of tweets. And when you're typing that, when you're engaging, it's actually data, free data for Elon Musk, so free data for Twitter. So what Grok can do is pulling data from X, or pulling data from Tesla, because Tesla has been around for decades and it's great use for AI to learn that autonomy. And there's also a huge GPU superclusters, and Tesla is trying to do the chips in-house as well. So I'll say I'm looking at these two rivals, so XAI and Google, quite a lot, but let's see how this plays out, because the LM sectors is intense and the competition is really, really keen. All right, so last news I have for you guys is that Coinbase is really becoming a super app, because we have a tease right here. They are not just trying to be a crypto exchange. They are transforming into a full TradFi plus crypto super app that include right here. So look at this tweet. Working on stock trading and right now working on prediction market. And they did tease that they're trying to launch this out in December. So there are a few products we could look forward to, starting with stock trading. So perhaps on the Coinbase app, users can maybe slowly buy AAPL or TSLA, like all these giant stocks on directly through the Coinbase app. So that's one feature. Second feature, very likely they're going to add ETF trading. ETF, of course, like the mainstream being SPY or QQQ. And then third is that very likely they're going to add prediction markets as well. So they're trying to turn a crypto exchange into really a all-in-one app. So blend crypto and traditional market together and trying to reach 1 billion users. That's the vision of the CEO. So is this a good thing, a bad thing? Like, of course, there's more pros than cons. Like one app handles everything because we don't need Coinbase or and then Robinhood and then multiple wallets, and everything just sit inside one app is actually a really good UI UX. And of course, it's crypto, so it has that nature of 24/7 because crypto runs non-stop. Coinbase is pushing stock toward the same model, towards the same level as well. But of course, it takes time for us to get there. And the prediction markets often produce better forecasting than pools. Tokenization expands to real world assets as well. So I'm, again, I have strong conviction to the whole RWA sector. But when it comes to the coins, pros and cons. So when it comes to cons, we know Coinbase has been down for a few times. So more assets in one platform, that means bigger attack surface. And Coinbase has been hacked before. So if a major hack happen, it could be very catastrophic. But yeah, I know it's not a popular comment, but I just have to throw that in. All right, so that's pretty much all I want to cover in today's show. Like we went over again because we have to hand over the show at 5:30 on Roxham TV. But last call to action, make sure to follow us on Twitter. So my Twitter account, my Twitter handle is jamjamcrypto_io. Make sure you put _IO in, otherwise you're gonna end up getting this hacker, which you don't want. So also follow Roxham TV on Twitter as well, because we have regular updates hitting you guys. Is about not just Bitcoin, but global news about how the macroeconomy is doing or some random AI news. So make sure to give us follow, because we have a lot of valuable contents out there. So that's pretty much all I want to cover. Thank you so much, guys, for sticking around and watching the entire show. As always, my show is from Monday to Friday, starting at 3 a.m. Eastern Time. If you guys don't manage to catch that live, because my time zone is a little bit weird, don't worry, the replay is also available on both my channels, so Jam Crypto YouTube channel and also on Roxham TV YouTube channel. So thank you so much, guys, for watching. I hope you guys have a fantastic day, and I'll see you guys in tomorrow's show.
Security matters. Zappo Bank.